I'm Ifty from CLiK Trading Education, and welcome to this week's CLiK Weekly Market Note. This is your structured breakdown of what actually moved markets this week. Beyond the headlines, beyond the noise, this is educational commentary only, not financial advice or trade signals. Last week was a textbook reminder of something every trader eventually learns. Markets don't move as one. They rotate. Some assets pushed higher, others came under pressure, and a few sold off sharply. For traders, that divergence isn't noise, it's information. Rather than reacting to headlines, the focus this week is on what moved, why it mattered, and what to take forward. Starting with the data. Equity markets diverged. The Dow, Russell, and Ifty outperformed. The S&P posted modest gains, while the Nasdaq lagged, reflecting pressure on growth and technology stocks. In currencies, the US dollar firmed slightly. The euro and sterling softened, while dollar-yen moved higher. In commodities, gold rose strongly, while silver fell sharply. Crude oil weakened. Crypto experienced broad, aggressive selling across the asset class. Volatility spiked midweek, then fell sharply into Friday's close, finishing the week calmer than it started. The key theme here is rotation, not panic. Capital moved deliberately into more traditional domestic and less rate-sensitive stocks, lifting the Dow and Russell. At the same time, growth-heavy and valuation-sensitive technology names lagged. This wasn't a risk-on or risk-off week. It was selective buying through rotation. For developing traders, the lesson is simple. When indices diverge, don't force one narrative. Ask where money is going. Technology and growth stocks remained under pressure throughout the week. Heavy capital expenditure, particularly around AI, raised questions about return on investment. Earnings momentum slowed and valuation discipline returned as elevated multiples became harder to justify. Markets weren't reacting to hype. They were responding to earnings reality. Crypto markets saw broad, aggressive selling. When pressure hits the entire asset class at once, it usually signals leverage being reduced, risk being trimmed, and confidence tightening. This doesn't mean crypto is finished. It means liquidity-sensitive assets tend to feel risk changes first. For traders, crypto weakness is information about broader risk appetite. One of the clearest signals of the week came from precious metals. Gold rose while silver fell. Gold acts as capital protection. Silver behaves more like a risk asset. When gold rises and silver falls, it often signals risk filtering, not panic. Professional capital becoming more selective. Central banks reinforced that cautious tone. The Federal Reserve remained patient, keeping rates on hold while markets continued pricing potential cuts later in the year. The Bank of England struck a cautiously optimistic tone, supporting UK equities and financials while stabilising sterling. Geopolitical risks added a quiet premium without triggering broad fear. Volatility tied it all together. The midweek VIX spike reflected genuine uncertainty. Markets adjusted, leverage was reduced, and risk repriced. By Friday, stress had been absorbed, not escalated. Volatility isn't danger, it's information. Often the right response isn't more trades, but smaller size and greater selectivity. The big lessons from this week are clear. Rotation matters more than direction. This wasn't panic. It was intelligent risk filtering. Policy tone mattered more than headlines. Gold strength and silver weakness signaled caution, not fear. Weeks like this build pattern recognition, and that's more valuable than catching one lucky trade. Looking ahead, preparation matters more than prediction. Inflation data will influence rate expectations, the dollar, technology sentiment, and gold. Central bank commentary will matter as much as decisions themselves. Labour market data feeds directly into the higher for longer debate. Earnings, energy headlines, and geopolitics remain potential rotation triggers. The most sensitive areas to watch are Nasdaq and mega cap tech, USD, JPY. the gold-silver relationship, and crypto markets. A reminder, not every week is for trading. Some weeks are for observing, learning, and protecting capital. Rotation often breaks old correlations, and discipline matters more than activity. One market, one plan, one process. Consistency comes from discipline, not excitement. That's your CLiK Weekly Market Note. If you found this breakdown useful, like the video, subscribe to the channel and share it with other traders who value structure over hype. It helps us keep delivering clear, educational market insight each week. Stay focused, stay disciplined, protect your capital, financial and emotional. Until next week.